Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 4th of June, 2022. And it's the weekly technical analysis for spot gold and dollar yen for the second week of June. Let's begin with spot gold. Expand this so you can see that starting the week it dipped lower, restricted by the daily 200 EMA. But then found support on Wednesday, even with better than expected ISM manufacturing figures, and continued to rally on Thursday before hitting the close to resistance zone near the daily 55 EMA, and pulling back down into the 1850 zone, 50 level on Friday with slightly better than expected NFP figures. So this is still a valid resistance zone. This probably is a swing high or swing low area. It's a swing high area from the end of last year. Okay, which aligns with the daily 55 EMA. So above that is still the significant resistance at the 50 FIB, along with the round figure of 1900 above that. So we've got two FIBs running here. The one in white is the shorter swing move down here, and the pullback into the 38 FIB retracement. And I think we could likely use that for now and take out this longer term swing. So the recent swing move down, the retracement has retested 38 FIB twice now and has been restricted. So we'll see if this coming week there's going to be an opportunity for a breakout higher again, testing the resistance zone to try to target the 50 FIB retracement. As at the 1892.50 level. Okay, so for now, we'll see if this is trying to move into an ascending wedge. But if it does, then there's a possibility of a breakdown lower as well. But we'll see next week. With the only news is the CPI figure on Friday, late in the week. So it's leveling off at the resistance zone, so it's losing some momentum here, and we'll see whether that corresponds with the US dollar index later on. But it did manage to find support from the 1832 level, bouncing off from the 21 FIB retracement. So this is still a potential range between the two FIBs or slightly higher above the 38 FIB. So let's mark this zone here for the 21 fib area, that's support. And we could likely remove one of these, move this up slightly into the swing low, this swing low area, just above the 1780 level. Okay. All right. So likely next week, that's could be just operating in this range, unless there's some trigger to push up higher. Either the CPI figure comes in lower than expected, and the overall inflation is tapering off, then that could impact the US dollar movement, and there could be some respite for the other major pairs, but we'll see. All right, so let's compare that with the US dollar index, the DXY. So here's the US dollar index, the DXY, and indeed resistance has held. That's at the 162 fib extension here. So it did attempt to climb up higher on Wednesday with the better than expected ISM manufacturing numbers, and pull back all the way on Thursday before recovering back up to close at the 102 on Friday with the non-farm payroll report. Although the ISM services figures was slightly lower than expected, but the non-farm payroll report was jobs added was relatively better than expected, similar to the previous month. And support is still safe at the daily 55 EMA. So this zone at the 138 fib extension, along with the 55 EMA and this previous swing high area. Has now become support. All right, so this is a weekly time frame, and a spinning top with a bearish, with a bullish close right into the 102 level. So it's still finding support, and is able to creep up higher for this coming week. But it's unlikely to drive further up higher. Into the 104 area. So that's going to be a tall order for next week. All right, so looks like it's still in this consolidation zone from the 101.30 to the 102.45 area. And with only the CPI figure for next Friday, so no major impact coming up next week. Okay, so let's move back to the other pairs. All right, before moving on to the dollar against the Japanese yen, let's also take a quick look at the weekly time frame for spot gold, and it closed as a almost a doji, and just sitting on the 1850, just above the weekly 55 EMA. So it's a possible consolidation for next week within the 2 fips that I highlighted already. And for this new month, it has been drifting lower the last couple of months, so it looks like it could be stalling a bit, and bearish momentum could be tapering off. So we'll see if it's yeah, it could be just consolidating for this month before the next move. All right, so let's move on to the dollar against Japanese yen, where it has rallied for last week, starting from the 127 round figure on a Monday, and rallied through 3 days with a pause on Thursday and closing strong on Friday to almost hit the 131 round figure. So a move of almost 400 pips here. So a strong rally for last week, and easily broke through the round figure of 130. So this is now going to be support. Strong resistance still above at the 131, along with the 262 fib extension of this reversal move. We could change that as well. And perhaps we can remove this and mark this as a key support zone now with the 138 fib extension because of all these swing lows. So let's change this fib now. And yes, that's it did pull back, retrace back into the 50 fib exactly. So right along with the daily 55 EMA. That's the support zone. And this level here at the 786 fib retracement just above the 129, that's the next support zone. All right, so we'll see this week whether it has enough momentum to carry it through to break through higher. And let's take a look at the weekly time frame as well. And that was the very strong bullish candle here. Could be a retracement, pullback for the next bullish leg. And for the new month, that's a recovery for the month after a large spinning top. Long-legged spinning top here for the previous month, which was expected because of a couple of bullish months, very strong bullish months already. So there was a pause. Okay. All right, so do check out my other videos on the other major pairs and have a safe week and a good trading week. And cheers for now.